Let's bring in top-ranked retail analyst Matthew Boss from JPMorgan. Welcome back. It's good to see you again.
Thanks for having me on, Scott.
So I'm going to read something you told me after the December retail sales report, okay? You said, quote, retailers and the consumer picture in the front half of 23 is going to be a pretty rough ride. The back half of the year, I think, is where there's potential opportunity on the horizon. Man, I mean, have you underestimated, like many people have, the resiliency of the consumer?
Look, I think the consumer is resilient. You have to be careful with January. There was a tremendous amount of promotional activity. You also had perfect weather. And third, you lapped Omicron in terms of a year-over-year basis. I think the three-year picture shows a resilient story, but not quite the same strength, meaning January three-year basis was more or less in line with November, better than December, slightly worse than the October through or August through October period. So I think what you're seeing is smoothing out the data. You're seeing a resilient consumer. You're seeing a stable consumer. But I think there's a lot of different puts and takes as we move into 2023.
That's fair. I mean, nonetheless, though, the consumer is hanging in there. I mean, I guess the biggest question is how long can it last?
Yeah, look, I think in terms of the back-end weighted year, you know, what we've pointed out is input costs. That's a back-half weighted opportunity. The freight side is a back-half opportunity. Look, the consumer in the second quarter and into the back half of the year, that's where they were really changing their budget, tied to some of these inflationary pressures. So, look, I do think the shock factors year over year, gas prices, which last year skyrocketed as the year progressed, food inflation. I mean, this is opportunity. That said, the flip side is middle income and the aspirational consumer. The employment picture is not quite what it was a year ago, as nearly every company comes on your show and talks about layoffs. So I think there's puts and takes. Our view is value, convenience. Off-price retailers, I think, stand at the top of the list, and best-in-class brands, the Nikes of the world, the Lululemons. I want self-help, and I want larger total addressable markets. That's where I'd rather focus on the fundamentals.
I mean, Tapestry is one of your picks. It's one of the best performers year to date. I was looking at a list of discretionary names that had done well to start the year. It's on it. So who gets squeezed? Then the middle, high end does well, lower end does well, and then what does it mean for everybody else?
I think it's the middle, meaning, look, our approach so far into 23 is more of a barbell. Low-income consumer has a job. Their wages are up mid-teens relative to 2019. I think that consumer is stable. They rebudgeted, like I said, middle of last year. Some of the shock factors are not quite as aggressive in 23 likely as they were in 22. High-end has the nest egg. Luxury, I think, is fine. It's the middle income consumer that I think did not have these wage increases. If anything, is facing the potential of layoffs. That's where we're seeing a lot more pressure. That can create trade down, though. That's why I like these off-pricers, TJX, Ross Stores, Burlington. That also creates value focus, which I think is your dollar stores, Dollar General, Dollar Tree. It's those middle income focused retailers that I'm worried that you do not get the high income trading down like you did in 08-09. And those retailers are searching for the catalyst in terms of that incremental dollar.
Who's the best name in your universe that nobody talks about? From your outperformer overweight list, the best one that no one talks about?
Look, I think as we move throughout the year, one of the trends that's going to come back strong is casualization, athletic active. So there was an overhang on this coming out of the pandemic, and that people said that, people were stayed at home, and that was an over-pandemic bought category. I think you're seeing a normalizing trend. Nike and Lulu, I think, will be strong beneficiaries multi-year of a trend towards this casualization, including return to work in terms of what's acceptable today on the lifestyle front that maybe wasn't 3, 4, 5 years ago. So Lulu, which is flat nearly 2 years now of performance, Nike, which went through issues tied to the supply chain, I think those could be strong performers from a multi-year basis, which backs into my buy the best-in-class brands here for the multi-year.
All right, good stuff. Matt, I appreciate your time very much. That's Matthew Boss, JPMorgan.